Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it is the penultimate day of the trading session and not much of a bazooka we are seeing from the global markets now that the US-China trade deal has been announced. We were expecting that, there's going to be a significant reaction, but global markets are quite muted at this point of time. But yes, the US President Donald Trump did say that the trade deal with China is done and Chinese imports would attract about 55% tariffs, while US exports would see about 10% tariffs in China. But the major headline that we were waiting to see was the agreement on the rare earth elements, and that is done. That's what Trump has been saying, that the China will be supplying all of these critical minerals upfront. So that's a positive thing that is coming in on that end. But where does India stand in this scenario of negotiations, given we've been seeing supply disruption and setback in the rolling out of EV portfolio? Yesterday also we saw an update that came in from Maruti Suzuki, where they have delayed the production estimates for their electric Vitara. So all of this we will be trying to understand from our experts in the show also. And moving on about global markets, how they have fared. US markets were muted overnight. They've snapped the 3-day winning streak despite the softer than expected US inflation print. And even Asian markets are quite mixed despite the announcement of the trade deal. So yes, all of that from the global markets. But yes, oil prices, once again oil on the boil, and once again to that $70 per barrel. That is one major development that we will watch out for today. Oil and gas stocks, all of them will be in focus today, given that US has ordered personnel evacuation from its embassy in Iran. So the rising West Asia tensions is something that the markets will also focus on in today's trading session. Now, if you look at our markets, muted start, pre-open rates are also indicating a very flattish start at this point of time, given that we have also the weekly expiry today. So some volatility is something that could be, would not be ruled out in today's trading session. But yes, like usual, we'll be taking up your stock related queries with our market experts. So keep posting them on our live feed and we'll take them up shortly. For now, let's quickly take a look at the top headlines. Stocks on Wall Street end Wednesday's trading session flat to marginally lower. The move comes after US consumer price rose less than expected at 0.1%. Stocks in the Asia Pacific are trading mixed as traders are assessing Donald Trump's quote-unquote done trade deal with China. The GIFT Nifty meanwhile is indicating a muted start for our own markets. Crude oil prices tick up on worries of escalating US-Iran tensions. This as President said that the US personnel were being moved out of West Asia. Gold prices meanwhile too rise on cooler than expected inflation report. The US-China have agreed on a framework to get the trade truce back after 2 negotiations in London. US President Donald Trump has said that the deal is subject to approvals, also claims that China will supply rare earth magnets upfront. And the central government reduces the basic customs duty on major imported crude edible oils from 20% to 10% in a bid to tackle rising edible prices. All right, just 5 minutes to go before we go to the open. But yesterday the market did extend its winning streak to the 6th consecutive day. It held on to that 25,100 levels. However, it was very flattish during the end hours of the trading session. Throughout the trading session, the benchmark indices did hold well, but after 1 p.m. the structure completely changed and it was off its day's highs level also. But yes, the broader end of the markets, midcap and small cap indices, that broke its winning streak yesterday. But whether or not this is just a pattern which is building up, or this is this is something which is a very temporary reaction, that is something that we'll watch out for today also. But yes, among the sectoral indices, oil and gas, IT, Pharma, they were the major gainers in the last session. Oil and gas, despite being the gainers in the last session, today we'll watch out given crude prices are back above that $70 per barrel. On the other hand, on the losing end, PSU Banks, FMCG, metal indices, that ended in the negative territory. But coming to the fund flows data, FIIs were net sellers yesterday, 441 crore rupees of stock cash markets they have sold in yesterday's trading session. However, the DIIs, they were the net buyers and they have bought stocks which was about 1600 crore rupees in the cash markets. Coming to the F&O ban list, two new stocks have been added, that is your CDSL and IEX, and the stock that continue to be a part of the list, that is your Aditya Birla and Fashion, Trumbull Fertilizers, Hindustan Copper, Titagar Rail, RBL Bank and Irida. So a lot of stocks which have been in the part of the F&O ban at this point of time. But yes, just 5 minutes to go before we go to the open, and we are seeing a very flat rates in the pre-open for the Nifty. Nifty still above that 25,100 in the pre-open, but we'll watch out if it sustains that level in the today's trading session. But let's quickly get on board with the technical expert of the show. Joining me is Chandan Taparia of Motilal Oswal. Chandan, good morning. How are you viewing the Nifty? We've been trading in a range from the past 2 days, but yesterday we did cross that 25,200 mark.
Good morning, Lavina. Thanks for having me. So Nifty has been consolidating in a range from last three trading session, but supports are intact. We have noticed that index has been moving in between 25,055 to 25,222. Just couple of days back, it gave the breakout of last 4 to 5 weeks by holding well about 25,000. So the major trend is positive, and recent consolidation could see the next leg of rally. The good part is that India VIX is continuously cooling down, and VIX is now below 14 marks, quoting at 13.5 level or 13.69 level. So falling VIX with stable market clearly indicates that positive strength could continue. However, the momentum might be slow, but till Nifty holds above 25,000, we are expecting next leg of rally, which can probably take it to us 25,400 to 25,500. Talking about intraday point of view, it needs to hold about 25,050 for a bounce towards 25,250 to 25,300 levels.
Okay. What about the Bank Nifty levels, Chandan? Because 2 days consecutive losing end we have seen for the Bank Nifty. Of course, after this record high that we have seen back to back, some consolidation is bound to prevail, but anything that we need to watch out for?
Yeah, so Lavina, Bank Nifty really gave a tremendous move on last Friday after the RBI stance of 50 base rate cut. That day, Bank Nifty rallied by more than 1,000 points from 55,500 to 57,000 marks. And after that rally, the momentum is just getting paused. It witnessed some profit booking decline in last three trading session, but supports are intact. Until it holds above 56,000, we are expecting again recovery towards the new lifetime high. So buy on decline could continue, and I believe after the positive stance, the corrective or profit booking stance of last 3 days is now getting over. So till it holds above 56,000, continue to be with buy on decline for an upside target towards 57,000 in Bank Nifty index.
Okay, all right. So the bullish structure is intact in the Bank Nifty index. What about the mid-cap and small-cap indices? That fizzled out rally yesterday. But do you believe that this is just a pattern which is building up, or what is it indicating for the near term at least?
So the mid-cap index is comparatively doing well. If I just look at the comparative ratio chart of the Nifty and the mid-cap or small cap, the good part is that FIs are continuously selling, or they are having the mixed cues. And FI's long short ratio in Nifty future is around 22%. So because of the FI selling, index is getting a mixed cues, holding near 25,000 marks. But as DIs are continuously buying, and SIP flow in the last month has gone to 26,600, that clearly indicates that mid-cap momentum could continue. So I believe most of the mid-cap and small cap could continue to see the positive momentum. In fact, this index has potential to head towards the new lifetime high. So expecting positive stance, and many mid-cap and small cap will continue to head towards the fresh leg of rally.
Okay, mid-cap fresh leg of rally we can expect from the broader end of the markets, and especially is bullish on the mid-cap index at this point of time. But yes, the first rates coming on is screen. Negative start for the markets, very quiet start for the markets, very flat in the red at this point of time, but still holding above that 25,100 mark for the Nifty. Sensex is also have opened at a marginally lower rate, but with about 69 points downtick that is coming in for the Sensex too. And if we look at some India VIX is also, it has spiked up by about 2% or so at this point of time, given that we have also had the weekly expiry day today, so some volatility could be expected in today's trading session also. But yes, from the sectoral perspective, let's take a look. Nifty Auto Index not doing well with about 0.1% cut coming in. Nifty IT Index after 6 days of consecutive rally it has cooled off in today's trading session with about 0.5% cuts that is coming in for the Nifty IT index. We did see some good inflation report that came in from US that reduces the chance of interest rate cuts going ahead. So that could be a sentimental play out which is coming on, weighing on the IT stocks also. Other than that, metal stocks not doing well with about 0.1% cut coming in for the Nifty Metal Index. And Nifty FMCG, after yesterday's down move, it is seeing a little bit of a uptick with about 0.3% gains coming in for the Nifty FMCG index. Let's take a look at Nifty Pharma index. That is also doing quite well with about 0.7% uptick, and Nifty Media index is also holding once again well with about 0.5% gains or so. But coming to the Nifty small cap and mid cap indices, small caps once again very in the negative territory, and mid caps also very flat at this point of time. Both of them flat in the red at this point of time. Coming to some of the top gainers and losers on the Nifty 50, ONGC soaring in the trade with about 2.3% uptick, given that oil prices are also back above that $70 per barrel. It's seen a 5% jump in just overnight. So that could be playing out. Other than that, we can see some Dr. Reddy's Lab doing well, Asian Paints doing well after 2 days of consecutive losses that we saw on the counter with about 0.1 with about a percent gains. Some of the pharma stocks have been dominating on the Nifty 50 list. Dr. Reddy's, Cipla, both of them seeing a gain of about 0.5% to 1% so at this point of time. Reliance is doing well with about 0.3% gains with about 1454 rupees at this point of time. Let's take a look at some of the top losers on the Nifty 50, given that the consecutive rally that we saw on the tech stocks, now they have fizzled out. Today we can see Infosys as one of the top losers on the Nifty 50 with about a percent cut. Other than that, Tech Mahindra is also not doing well with about 0.3% cuts. And some of the other stocks like Tata Motors, M&M also seeing a cut of about nearly 0.5% or so. But yes, IT stocks, which was doing well from the past 6 days, today has fizzled out the rally. Chandan, what do you expect from the Nifty IT index? Do you believe that it is time to relook at the sector, given that we did see 6 days of consecutive rally?
Yeah, so Nifty IT really did well in last 6 trading session and given a phase breakout. However, it has been consolidating for the day, but the trend is intact. We have seen buying interest in counter like Emphasis, Tech Mahindra, HCL, and most of these stocks are getting some pause and positive momentum. So I don't think that trend is going to change. It might see some consolidative move, but again the recovery could be seen. So I'll look for wait and watch and may wait for some decline to accumulate these counters.
Okay. Let's take a look at some of the alcohol stocks, Radico Khaitan, United Spirits, Allied Blenders, because they were sharply down yesterday after the Maharashtra excise duty increase. But today the stocks have been doing quite well. It is after the gap down move yesterday, the stock has been doing well with about 0.5% gains or 1% gains for coming in for the Allied Blenders also. But what does the chart indicate for the near term, Chandan, for all of these counters, given that we did see a negative reaction that came out yesterday?
So again, yesterday we have noticed profit booking in most of these counter. In fact, United Spirit has seen a corrective move from 1645 to 1482 in last 2 to 3 trading session. Today's flat, but again, supply is clearly visible. We have seen build-up of short positions, so not suggesting to buy. Wait for some consolidative or corrective move. The good part is Radico has bottomed out. It has seen a corrective move from 2785 to 2535, and now finding some supported lower levels. So I think here one can look for some accumulation with support of 2575. It can head towards 2700 levels. Apart from that, I believe one can look at the Sula wine. A major trend is turning to positive. It really did well on the last trading session. In last few minutes is just slightly down, but again till it holds about 300, decline could be bought towards 330 kind of level. So Radico and Sula could be two preferred idea in this segment.
All right. Let's take another stock in focus, that is your Hindustan Copper. The stock has been doing well. Yesterday, the company also planned to invest about 2,000 crore rupees over the next 5 to 6 years. And the company does aim to expand its mine capacity from the current 4 million tons per annum to 12.2 MTPA by FY31. Chandan, if we look at the stock has been trading in a range of about 200 to 250 rupees per share from the past 6 months. How does the near term look like for Hindustan Copper?
So for Hindustan Copper, we have seen recovery in last 5 weeks. It really dwelled from 200 to 265 and now has been consolidating, but the base of the counter is shifting higher. However, on the last trading session, it has seen a corrective move, but supports are intact. So I believe till it holds above 255, go for buy on decline. It can head towards 270 marks.
Okay. Okay, 270 marks. Let's take some viewer queries at this point of time. The first query coming in from Naveen is asking the view on HPCL from a near-term perspective. HPCL today, it's down in the trade given that oil prices are also back above that $70 per barrel. So downstream companies are of course not doing well in today's trading session. But from a near-term perspective, Chandan, what do you expect and what would you recommend him?
So most of the oil marketing company has really seen a decent recovery, but again the momentum is getting paused. In fact, the profit booking is clearly visible. HPCL gave the breakout rally to well from 400 to 423, but again it's near 400 marks. So I think the failure breakout is clearly visible. If it holds below 400, I believe the corrective move can take it towards 390 to 385. If you look at the BPCL, it also seen a corrective move by around 2% from higher levels. Multiple supports are visible near 320. So getting the mixed cues in most of the oil marketing companies, better to wait and watch for next clarity or let the trend be very clear here.
Okay. All right. That is the view coming in for HPCL. Let's take a look at another viewer query. Nathan Shaji is asking the view for Suzlon for a new entry for the period of 3 months or so. We did see that the stock reached a top in the month of June with about 70 rupees. But since then, the stock has been not doing well with about 5.6% downtick ever since that. Chandan, can we expect it to reclaim those levels or what are we expecting, at least from a 3 months perspective?
So in the last month, Suzlon really rallied well from 50 to 74, but from last almost 10 days, it has been witnessing corrective move. It has seen a corrective move from 74 to 67 marks. Multiple supports are visible at 66, 67. But if it holds below the same, profit booking could start. So I think getting a pause in momentum, we need to focus at key support of 65 as of now.
Okay, key support of 65 for Suzlon that we need to watch out for. Let's take another viewer query. That is your Pooja Khanna is asking that she's holding Infosys at about 1760 rupees per share. She's asking when to average. If you look at the stock, it is trading at about 1600 rupees. So she's seeing a bit of a loss at this point of time. But given that the IT stocks have taken once again the market flavor, so let's see how it pans out. But Chandan, any views on Infosys?
So like most of the IT counter have seen a profit booking decline after the rally of last 6 to 7 days. Infosys witnessed a run up from 1540 to 1635 and now witnessing corrective move of around 1.5-2%. Short-term trend is positive, but but on immediate intraday trend is taking a pause. So I believe it might see a corrective move which can take it towards 1590 to 1585. So look for a decline and then wait for bargain buying in the counter.
Okay, all right. Wait for the decline for Infosys. Let's take another stock in focus. That is Naveen is asking the view on Bharat Electronics and the entry levels for positional trading. Chandan, if you look at from February lows, the stock has been on a tear away rally with about 16% gains, 60% gains. What does the near term chart suggest, and what is the entry level you would suggest?
Yeah, so one of the strongest counter in this market scenario, which rallied well from 245 to 400 marks in just last 4 months. And geopolitical concern was the key trigger for most of the defense name, and BL has really done well. In fact, the stock has been making high top high bottom formation, and in last 5 years, it really do well from 20 to 400, gone more than 20 times. So major trend is positive, but let's look at the short-term trend that is slightly on the positive side, but has been consolidating. Even on last trading session, it witnessed some corrective move from 400 to 390 marks, but trend is intact till it holds above 380. So I'll go with buy on decline stance. However, stock really do well, but major trend is positive. So we are looking for any sort of momentum. So till it holds above 378, 380, go for buy on decline. It has potential to rally towards 405 to 412 kind of level on the hard side.
Okay. All right, 1200 level on the higher side. Let's take another viewer query. That is your Pooja Khanna is asking that she is holding Varun Beverages at the price of 490. What's the stop loss and the target price that she can watch out for? Varun Beverages, any thoughts, Chandan? Because recently Goldman Sachs also gave out a target price of about 600 rupees. Do you believe this target price is achievable?
Yeah, so Pooja ji, this stock has seen a corrective move from 570 to 468 marks in last 8 to 9 weeks. It was making lower top, lower bottom, but now has been consolidating with multiple support near 466, 470. So we are getting an early sign of a bottom out approach. In fact, a small follow up could negate the lower top, lower bottom of last couple of weeks. But again, momentum is missing. We have seen a decent run up in the broader market, but in spite that the stock has not performed, it has not generated alpha. But yes, it formed the bottom, so one can hold with support of 465, and we can see an up move towards 500, 505 in the counter led by bargain buying and support based buying.
Okay, all right. Let's take another viewer query at this point of time. Geetu Sandesh is asking on Tata Group companies. She's asking what is a better buy for an investment, Tata Motors or Tata Steel? Any thoughts on this, on both of these counters, Chandan?
Yeah, good morning, Geetuji. So if we look at the Tata group of companies, Tata Motors recently bottomed out with support of 535, but still this stock is underperforming because in last 12 months we have seen a corrective move from 1180 to 535 and then now hovering near 730 marks. It witnessed recovery in last 4 days from 700 to 744, but now some corrective move is clearly visible. So I believe Tata Motors could be the buy, but again, it has more volatile nature. Whenever it gets momentum for 3 4 days, it gets stuck and then seen corrective move. So I think let it see a corrective stance. Then with support of 720, you can accumulate for an upside target towards 745 to 750. So talking about Tata Steel now, here it has seen a corrective move from last 3 weeks, has been forming the lower top, lower bottom from last 13 days, corrected from 165 to 155. So if you are looking for more stable stance, I think Tata Steel could be the buy on decline. But again, Tata Motors also have the same. So again, if you are confused with Tata Motor, Tata Steel, you can put the 50% quantity in both because same sort of price behavior is visible, not having much conviction but getting the mixed cues. So better to go with range bound bias or buy on decline stance in both the counter.
Okay. All right, both of these counters that she can watch out for. Let's take another viewer query. That is your Jaskaran Bajwa is asking the view on Zydus Life Sciences. He is seeing an average price of about 966 rupees. Right now, the stock has been trading with a good set of gains about 979. And yesterday also, the company did receive an EIR from the US FDA for its API facility in Gujarat. Now, the inspection that was conducted from March 10 to 14 this year has been classified as no action indicated. Means that the FDA did not find any objectionable conditions or practices during its review also. And if you look at from the past 1 month performance, the stock has been doing quite well. Chandan, what do you expect? Do we expect the rally to extend, or what is the price that he needs to watch out for?
Yeah, good morning, Jaskaran. Zydus has seen a decent run up from 800 to almost 1000 marks. It witnessed some corrective move in last two trading session, but supports are intact. However, price might be slightly lower than your buying price, but you can hold because it may see some recovery because of its defensive nature, and second because of the bargain buying because already we have seen a corrective move in last 10 to 12 months in the counter. So if you are holding the position, you can hold with support of 950 and again look for an upside swing to 1000 to 1020.
Okay, all right. Let's take another stock in focus. That is your Avichal Rastogi is asking the views on Hyundai. He did get the IPO, so he's asking whether he should continue to hold or sell at this point of time. Chandan, we did see that the company did break its IPO price and of course the listing price in the recent days also. What do you suggest for him to hold or sell?
I think you can hold Hyundai because the price setup seems quite encouraging. However, we don't have data of more than 8 months, 8 to 9 months it came in the secondary market in the month of October. But really, the sustained buying interest is clearly visible. In last 4 months, we have seen a recovery from 1550 to almost 2000 or 1985 marks. Even on the weekly chart, it has been making high top, high bottom, and giving a classical price breakout for next leg of rally. I believe Hyundai could be the one of the strongest name in the auto pick, which is trading at its recent high and trading at the words of the fresh breakout. So I believe one can hold with support of 1910, and I believe Hyundai can head towards the new lifetime high towards 2020 to 2050 and beyond that levels.
Uh, uh, Red Shoot is asking whether or not it is good. It is a good time to buy Reliance Industries at the current price for the short term. Reliance Industries, any views on the counter, Chandan? Because if you look at from the 6 months perspective, the stock has been doing well with about 15% gains.
Yeah, so Reliance has really seen a massive run up in the month of April. On those days, it rallied well from 1114 to 1400 marks. In last 2 months, it witnessed some consolidative move, but again headed towards 1468 levels. So after the decent run up of last 2 months, now some sort of consolidative move is clearly visible. But in that consolidation, supports are gradually shifting higher. If I look at the price behavior of last 30 days, multiple time this counter took support at 1375 to 1400, but at the same time, hurdles are visible near 1460, 1470 marks. I believe major trend is positive and this consolidation could invite the fresh leg of rally because on weekly chart setup or on the daily chart setup, the stock is forming a bullish pole and flag pattern, which indicate the buying interest in the counter. So I believe one can hold the long position with support of 1420. And this time Reliance Industry can head towards 1500, 1520 marks on the higher side.
Okay, 1520 mark on the higher side for Reliance Industries. Let's take another viewer query. Well, Satya is asking the comparison between United Spirits and Som distilleries for the long-term horizon. What do you expect, Chandan? Because you did say that to remain on the sidelines until the news is out of the way for United Spirits. But what about Som distilleries? Anything that you're watching out for?
So, like, if I do the comparative analysis between all these names, United Spirits could be under pressure or upside could be kept. Radico might see some buying interest. Sula looks good, and I think some buying interest could emerge in the Som distillery as well. So I'll avoid United and I'll focus on all these three names with the view that trend and setup is positive, and that's why buying interest could emerge here.
Okay, okay, all right. I hope you got your view query answered, Satya. Let's move on to another viewer query. Well, Jaskaran is asking the view on Gujarat Pipavav Port. He's seeing an average price of about 161 rupees per share. The stock is trading near what he has bought, that is your 163 rupees at this point of time. And in the past 1 month, the stock has done well with about 18% gains or so. But for the near term, can you expect the rally to extend, Chandan?
Yeah, so talking about Gujarat Pipavav GPPL, the stock has been making high tops, high bottom from last almost 5 weeks. It really do well from 128 to 167, and supports are gradually shifting higher. It has been trading above its key moving averages and holding well to its rising support trend line as well. Recently, it gave the breakout on the daily and the weekly chart, which also attracts the fresh buying interest. However, because of the market consolidations, it is also taking some pause in momentum, but trend is intact, and I believe till it holds above 160, GPPL can head towards 170, 172 levels.
Okay, all right, 170 levels that we can watch out for. Let's take another viewer query. That is your Dheeraj Sharma is asking whether he should buy GAIL or Petronet LNG for the long term at the current levels. Both of the stocks haven't really, performed that well from a year-to-date basis also so far this year, Chandan. But what do you expect from the long-term horizon from both of these counters?
So, Dheerajji, the stock looks promising if I talk about the GAIL, but momentum is comparatively lower with low beta and low alpha. Both are or lower alpha or low beta are also visible in the counter. But the good part is that base of the counter is clearly visible. It formed the higher base at 180, and after that, now the immediate base is shifting to 192 level. So those who are holding or interested to buy can use any small decline with support of 190. Look for an upside target towards 225 to 240 on positional point of view. Looking at Petronet, I believe we need some more consolidative nature of the counter. Let it come back to 295, 298 to accumulate the long position. So Gale, I think, looks quite promising comparatively, or Petronet might see some pause in positive momentum at current juncture.
Okay, all right. Let's take one more stock and focus, Realtel, because the stock has been doing well. We did see that the company secured a order book which was worth about 190 rupees, crore rupees from the southeastern coalfield. If you look at from the March lows, the stock has also picked up pace. Chandan, what do you expect for Realtel and of course the entire railway stocks, because they have been doing quite well in the recent days?
Yeah, so railway stocks are in budge, and I believe some renowned buying is clearly visible in most of the railway or CPSC counter. Uh, on reply to Railtel, the stock has rallied well or bottomed out at 265 just 10 weeks back, and now we are comfortably trading well above 460 marks. Major trend is positive, and I believe the consolidation move of last 6 days getting over, which might attract the fresh buying. So hold the long position with support of 450. We are expecting this railway counter to head towards 480. So I think one can hold the long position, and selective CPSC railway defense could be in action in this market.
CPSC defense. But coming to your defense that you're quite bullish on, but there's another viewer query that is coming in. That is your Soumya Reddy is asking the view on Garden Reach. She's bought it at an average price of 32.54, and she's asking what's the near term that she can watch out for. 32.54 that she's bought it, and right now the stock is trading below what she has bought.
Hi Soumya, thanks for asking. GRC really rallied well in last 5 years, from 172 to all the way to 3500 zone, and we are quite bullish on the same. And I believe many times in last few years we have recommended the counter. It has seen a corrective move to 1200, also rallied well to 3100 as well, but trend is intact. However, in last 6 days we have seen a corrective move from 3500 to 3100, but trend is intact. Until it holds above 3000, go for buy on decline and look for a bounce or recovery towards 3250 to 3300 levels.
Okay, all right. Just one last question before we let you go, Chandan. What are your top picks? Anything that you're finding interesting in this market at this point of time?
So entire market looks interesting, but some sort of consolidative move could be there because India VIX has gone below 14 marks after a long time. Lower VIX indicate the bullish bias, but at the same time, the swings and momentum will be missing in this scenario when VIX are at much lower levels. First trade I'll pick on LNT, Larsen and Toubro. Capital goods spread looks quite promising, and this stock has given a consolidation breakout on the daily weekly chart. So some buying interest could be seen here with support of 3330, with support of 3630. We are expecting a rally towards 3820 in LNT. The good part is that on weekly chart it has been making a high top, high bottom, and on daily chart the stock is giving the consolidation breakout. Second trading area that will be buy on Divis Lab. Selective pharma stocks are doing well, and Divis Lab has given a breakout on daily chart by a decisive hold above 6750. So with support of 6700, we might see a surge in price towards 7020 in Divis Lab.
Okay, all right. All right, with that we have to let you go, Chandan, but thank you so much for your time and answering our viewer queries.
Thank you.
All right, let's take a quick check of the markets before we move on to our next guest of the show. If you look at the markets, very muted moves at this point of time. Sensex up about 5 points, which is your very flat in the trade, flat in the green. Nifty also holding above that 25,150 mark at this point of time. So yes, very flat and muted moves that is coming in for the markets, but not a big surprise given that we did have muted global cues to start off with. So the gains and the moves have been mirrored by what the global markets have also been indicating. But among the sectoral indices, Bank Nifty has perked up in the trade with about 0.2% gains after 2 days of consecutive losses. Once again, Bank Nifty is doing quite well. Other than that, we can see Nifty IT index after 6 days of consecutive rally, they remain to be bogged down. And Nifty Pharma Index, however, in this market is doing quite well with about a % gains or so. But with that, let's move on to our next guest of the show. We have Aniruddha Sarkar, CIO and Portfolio Manager of Quest Investment Advisors joining us. Good morning, Aniruddha. How are you viewing the markets at the current juncture? Because we've been trading in a higher range than before the RBI bonanza, but valuations is still a concern. What is the next catalyst that the market is waiting for now?
Yeah, hi, good morning, and a very good morning to all investors on this business channel. So I would say that yes, after the last, I would say 60 days of a good run up, which we saw in the market, April and May, I think some bit of exhaustion is visible. And I would say exhaustion is not in the market, but as you rightly mentioned, I think valuations have caught up. So what looked cheap, say in March, post the correction of Jan-Feb, what looked cheap in March is not at this point of time looking very cheap. So I would say valuations have caught up, and with the RBI policy cuts and all the I would say macro and international news all over the place, I think most of those are priced in. The big trigger which the market is going to or I would say the big trigger which will take the market higher from where we are today is going to be the earnings. And after what we saw in FY25 and the fourth quarter, interestingly, if you see in the fourth quarter, we had some earnings upgrades also. But I would say with the first quarter numbers, which will begin from the next month, from July onwards, first quarter FY26, I think that would be one big trigger which the market is waiting for.
Okay, okay. I know that at the start of the year, everyone was talking about how the large caps will lead the rally this year. But it looks like the scenario has changed after the quarter four results. Mid caps and small caps have turned attractive. Do you believe large caps have been losing sheen, and this is how the structure is going to pan out for the remainder of the year?
See, one thing which all of us have witnessed in the market is I would say the consensus view, it never works in the market. And when the consensus view had become that, you sell small and mid and buy large, definitely this was bound to happen. Having said that, one thing which I always tell investors is that whether it's a large cap, mid cap, small cap, we need to keep an eye on earnings and valuations. In fact, in this whole, I would say the rally, there are some good large caps also which have done exceptionally well. There are some good small caps. There are some good mid caps. All of them have done well. So I would say that yes, company wise across market caps they have done well. Headline index wise, yes, small and mid has done much better, purely because those were beaten down more. And when they are beaten down with the domestic money which has started coming in, whether you talk about the HNI or the retail or the domestic mutual fund money coming in, I think it's the mid and small which gets more investors. Hence, they outperform the large caps.
Okay, okay. Aniruddha, we have the US-China trade deal which is out right now. More details are awaited on what the tariff contours will be. But I want to understand from a flows perspective. May was quite stellar for India in terms of FII flows, but June has started off on a very patchy note. How do you expect the remainder of the year to pan out for India, given that we now have a truce deal between US and China?
See, I would say that most of these recent FI flows which have been coming in and going out, I think most of it is the hedge fund money, and this hedge fund money will keep jumping in and jumping out based on the news flows, based on whether the US Fed cuts rates, whether you have a trade deal between India and the US working out, which is expected to happen in the next 1 month, because by 9th July it's expected to happen for India and US also, and also how the I would say the contours of US China trade deal happens. All this will determine this hedge fund money, which I would say is the hot money to keep coming in and coming out. The heartening part is that the long-term money, which is I would say the ETF money or the sovereign wealth funds, pension funds, endowment funds, they continue to be bullish on India, and their money continues to flow into India. So I don't think so that we will see any major outflows from India, at least in the medium term. And I think the trade deals will definitely help for the flows to come in back into India.
Okay, okay. Now let's talk about a little deeper into it. For instance, your US has said that the rare earth metals agreement has been signed, and China will be supplying them upfront. But where do you see India in this scenario? Do you still believe that, because they are still hanging by the thread? How are you assessing the impact for autos and of course for the EV portfolio as well? Because yesterday also we did see an update coming in from Maruti Suzuki that e-Vitara production estimates could be delayed from here on from going on. But from an overall auto perspective, what would you suggest at this point of time?
See, with regard to the rare earth metals, I think the only worry which China has is that whether the end use, so what is the end use of the rare earth? That is where China has a big question mark. And yesterday, in fact, the Indian government have been working with the Chinese agencies, and I think they are working on some kind of an agreement to ensure that the end use of the rare earth metals is going to be limited to the automobiles and the industrials, and it will not get into the defense use. I think that is where, if those terms get agreed, I think we should see our supply coming back into the auto sector. If I look at the auto sector, yes, there are companies which don't have much of a reserve, but companies like the Hyundai Motors, what I was reading yesterday, I'm sure even investors would have seen, they have almost like 1 year of supply of the rare earth with them. So I think those things will ensure that maybe companies like them will get a better market share compared to the others over the next 4 to 6 months as supply constraints are there. But yes, I think if the agreements fall in place, we should see the supplies coming back from China.
Okay, okay. What about, everyone is talking that, financials are going to lead the market rally going ahead. But among banks and NBFCs, what are you more bullish on after the rate cut scenario?
So I would say between banks and NBFCs, I think valuation comfort is no longer there. So I think a lot of the rate cuts, everything is all priced in. Now I think broadly valuation comfort, which was there in most of the private banks or NBFCs 6 months back, it's not so cheap now. Most of them are like above the last 36-month average valuations. So I would say that I don't see a multiple expansion in this space, but both banks and NBFCs will give you a return based on their earnings growth. So whatever is the earnings kind of a growth, whether it's 15%, 18%, you will see that type of a return, which will be more like a earnings-led return. On the BFSS side, I'm more bullish on the capital market play. So capital market play is something I believe has more upside triggers and has more potential to grow compared to the banks and the NBFCs. Simple reason, they are growing at almost 1.5 to 2 times the earnings growth compared to the banks and the NBFCs.
Okay, okay. You did mention that valuations has been quite a concern, but IT sector has not participated in this market up move. Do you believe that it is time to relook at this sector as a contra play at least?
Yeah, so I have been underweight on IT for a long time. In fact, I didn't have any single IT stock in my portfolios of my clients for almost 6 quarters. Of late, over the last couple of quarters, I have added some exposure to IT. But the simple reason for not going equal weight or even overweight in IT is that though valuation is something which has attracted me to add some weight, but the earnings weakness continues there. So hence, I think till that part picks up, because most of the IT companies still now are having issues with their deal pipelines not being strong, with their, I would say, the projects which they are winning, they are not getting the closures on time. So I think with all the uncertainty around the trade tariffs, I think even the US companies, European companies are uncertain with regard to their IT discretionary budgets. So till the pipeline of IT companies improves, earnings picks up, I would still be underweight on IT. But valuations gives you comfort to start taking small bites into it.
Okay, okay. What about the FMCG segment? Because so far they have been quite the laggards also so far this year as well. Do you believe that given the RBI cuts have been announced and the tax bonanza that is there, do you expect them to pick pace going ahead?
Yeah, I would say FMCG. So I would put FMCG in a broader basket of the consumption. So I think that is one part of the economy, which is the consumption, which definitely can get a good boost post the tax benefits going into the hands of the consumer. So in fact, this would be the first quarter, April, May, June. This will be the first quarter wherein the tax benefits will be actually there in the hands of the end consumers. So I think yes, FMCG from a perspective of growth picking up on the volume growth, I think that is definitely I'm quite bullish on. But valuation again on FMCG is quite expensive, so we'll have to take a bit of a kind of a cautious approach before venturing out there. Overall, I would say that the basket of the consumption is something wherein it can do well, but again, valuation is something which is not cheap over there.
Okay, valuation is something that is not cheap. What about the cement space? You know, a lot of brokerage houses and experts have been quite bullish on the cement space. But what is your take here, given that the sector is already trading at quite high valuations now, that we have early onset of monsoon also that could dent demand from going ahead?
See, I would say that with regard to cement, I think the period of the M&A activity in the cement space, which has been ongoing for the last couple of years, that is something which is, I would say, broadly over now. Most of the larger M&A activities have been done. Having said that, I think it's a good space to be in now, because I think what you will see going ahead is a price increase in the cement, which we saw in the last couple of months. We saw some small price hikes in cement across different regions. So I think price hike you will see in cement, and I think that will be the big trigger wherein your EBITDA per ton and everything will start improving. Valuation looks expensive now because cement prices have been subdued for long. And once the price hikes start becoming the trend, I would say that, cement companies definitely will do well. And valuations, I think, see, the good part of cement is something you have to manufacture it locally. You can't import cement as such, and being very bulky. And with the type of infra projects which are happening in the country, I think cement is definitely going to see a good the growth trajectory ahead.
Okay, okay. Just one last question before we let you go, Aniruddha. You did mention that the flows are going to be, remain positive for the medium term at least, and the earnings are something that we need to watch out for going ahead. But what is your target for Nifty this year? Because everyone has been pegging it will reach lifetime highs, but do you see at least 27,000?
See, getting an index target is definitely a very, very difficult job. But yes, I would say if I look at a pure earnings led, because see, if you would have seen in all my answers, I've been focusing on earnings. If I look at an index earnings, which is the Nifty earnings, I think in the next 1 year, we should do around 11 to 12% earnings growth. If that works out without any multiple expansion, one can expect a similar kind of a return on the index, which means around a 10 to 12% kind of a return on the index. If that works out, yes, you have your answer. You'll make a new high in the market.
10 to 12% from the current levels that you're mentioning then?
Yeah, pardon?
10 to 12% from the current levels for Nifty you're mentioning then?
Yeah. So a 10 to 12% in the next 1 year from the current levels, which will definitely take the markets to the new highs.
Okay, okay. But I asked you for 2025, not just like a complete 1 year from here on. I was asking you
Oh,
about
you're talking about
2025.
December, which is the next 6 months.
Yes, for the next 6 months.
The next 6 months, I would say making a new high is not impossible, but I would give it a 50-50 chance.
Okay, okay. All right, Aniruddha. Thank you so much. And with that, we have to let you go. But we hope that we connect with you soon.
Always a pleasure.
All right. Let's take a quick check of the markets at this point of time. Well, Sensex is down with about 100 points and Nifty is also down with about 28 points, but still holding above that 25,100 level, which we're hoping for. If you look at from the sectoral perspective, Bank Nifty has, it's marginally higher, but flat in the green at this point of time. Nifty Auto Index with about 0.5% cut and Nifty IT Index with a larger cut of about 1% or so. If you look at the oil and gas index, given that crude prices are back above that $70 per barrel, it is seeing a 0.5% cut coming in for the oil and gas index too. And Nifty Realty Index also not faring well with about 0.6% cut. If you look at the broader end of the markets, the mid-cap and small-cap indices, small caps flat in the green, and mid caps with about 0.2% cut coming in. So yes, the texture of the market still remains negative. However, since the declines have taken an upper hand at this point of time, but we'll watch out if 25,100 is something that Nifty can sustain in today's trade. But with that, we've come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.